both Lynn and I were doing this before we came on.
Right.
This is my Bloomberg app. There's a fair amount of red. We're down about 0.9% on each of the major averages. It was a little bit worse before. I was thinking about 2 years ago. I think we're on the invest stage. And the title of the thing, our discussion was Market in Chaos. Are we a market in chaos right now?
No.
Okay.
Markets go up and markets go down. Today it's going down. Yesterday it went down. But remember that the S&P and the Dow in particular are still above the pre-election levels. So remember, there was a big euphoria that occurred post-election day in the market. So,
which was maybe overdone at that point?
Potentially.
Yeah.
Potentially. I mean, markets recalibrate.
So I was thinking about yesterday, CoreWeave, backed by NVIDIA, cloud computing provider. They filed for an IPO. Bloomberg reporting it could raise $4 billion from the listing. It's expected to target a valuation greater than $35 billion. We are expecting kind of a wave of potentially sizable listings this year. On a day when the market sold off, it was the worst sell-off so far this year. What was more interesting to you? Was it the sell-off or the CoreWeave listing?
So what you will see now are companies start to flip public. But it's a timing thing. What most people don't appreciate is if you're a private company, your financials go stale at some point, so you need to restate financials. That's what happens between sort of that mid-February to end of February when you get your audited financials for the previous business year. So I anticipate, based on our pipeline, we're going to start to see some companies flip public. We had one flip public called Mountain on this past Friday.
Are you hearing from companies? You're busy.
Yeah, we are busy. We are busy. We're busy not just from the perspective of working with our pipeline to actually get them out the door, so in execution mode, but also we're very busy in terms of pitches.
Are you
where companies are, making plans? They're making plans for more like second half.
Sizable ones, smaller ones?
Yeah, decent sized ones, mix of both.
Now, are you worried though about our world is day to day, where whatever comes out of Washington, whatever executive order, whatever press event happens from the Oval Office, because it moves markets, Are you concerned about what you're hearing now and what seems to be optimism for IPOs, that could get derailed?
The only way that I think it's going to get derailed is if the volatility in the market becomes outsized. And I don't think it'll get derailed.
We've moved up a little bit, but...
We've moved up a little bit, but, a VIX around 20 is still fine.
So is there something, though, the president could do?
I don't know. He seems to be very focused on three key areas, or this administration's focused on three key areas: border security, resolving the wars that have sadly overtaken other nations, and our economy. And what you're seeing right now is the confluence of all three come into the fore and start to affect policy.
It's a lot.
Yeah, it is.
What about the rate environment? Because we have seen the U.S. Treasury curve move down significantly. It's been interesting the last few days. If we see that move down, I guess there's a couple scenarios, right? Moving down without a recession, better, especially for the IPO market. Tell me some of the other factors that you think about that will determine what happens this year.
Well, I mean, if you also look at the rate environment, that's going to affect mortgages, it's going to affect loans, it's going to affect other parts of the ecosystem. You look at the bank stocks, for example, they're doing quite well at the moment. That's probably more to do with promises on the regulatory side as opposed to the interest rate side. But there are a variety of other parts of the ecosystem that would benefit from a lower rate environment. So we'll see. What
do you think about the private equity world in terms of finally looking to spin out some of their investments? It's not been an easy environment. We know that Carlyle telling Reuters, I think it was yesterday, we're looking maybe for $4 billion worth of maybe, investments coming out. What are you hearing, or what are your expectations? Do we finally see some of the private equity investors somehow, either IPO, selling assets? What do you expect? Yeah, we've seen a couple of sponsor-backed deals go out
last year, actually, Standard Aero was one that did particularly well. That was a Carlyle deal that did particularly well in October of last year, raising north of $1 billion and trading really well in the secondary market. I think the more deals that get done at good valuations and raise good amounts of capital, and then importantly trade well in the secondary market, given the liquidity and demand from investors, I think you'll start to see some of the sponsors start to float their aged assets or look to the M&A markets. So it's not just about IPOs.
Right.
I mean, this administration's also promising a more favorable M&A environment, which is another area that's attractive to sponsors.
Lynn, one thing I wanted to ask you, the NYSE IPO index is down about 5%. That was as of yesterday's close. Bloomberg reporting about a couple of weeks ago how 3 of the U.S.'s 4 largest IPOs this year have traded below their offer price in their first session. So many would consider that black.
It's been a quiet though.
Does that tell you that they shouldn't have gone public, that they went too soon?
No, I think there's just a question on the valuations maybe, but sometimes that happens.
Yeah.
You know, first of all, there's been very few deals that have gone. We've had a couple of deals that have done really well. If you look at Flowco and Carmen, space and defense, those are in industries that are very attractive to investors at the moment. They've done really well. It's a bit of an art that the bankers have to do, though, figure out the right valuation mixed with investor demand. The companies that are trading below, they haven't had their first earnings calls yet. I mean, let's see where.
Are you saying be patient a little bit?
Yeah, it's not an instantaneous. It's not an instantaneous judgment on a company. Let's see how some of those companies do, particularly like a Venture Global, who's really well positioned in the LNG markets with all the infrastructure moves that are taking place in this country.
We've got 2 minutes. There's 2 things I want to ask you. In 2021, the U.S. IPO market hit a record high. There are some expectations that we could get back to pre-pandemic level. On the record, do you think we could get there this year?
I think 2021 is an anomaly. I think 2022 is an anomaly. I think those are 2 ends of the bell curve.
Yeah.
Positive and negative when you consider, depending on what your perspective is on 21 and 22. I think we'll get back to a more normal IPO environment where companies raise in aggregate about $50 billion, and there's a good number that actually go out. We would have gotten there last year, I think, if we didn't have a pause in the summer, which we saw, which was all sparked by the election and uncertainty around the election. So if you had asked me last May or June, I thought we were on pace for a pretty normal IPO year for 24. So I think we'll get there in 25.
The other thing I've got to ask you, there's so much money in the private world. I mean, just this week, Anthropic closing a deal to raise $3.5 billion at a valuation of $61.5 billion. OpenAI, meantime, currently in talks to raise $40 billion. SoftBank, other investors for an even larger $300 billion valuation. I could go on and on. How does that hold back the IPO market? That, especially, I don't know, is it just the AI world that is able to tap it in your view?
I think when a company comes out, they are more ready to be a public company. By more ready to be a public company, I mean you've got durable growth. You can articulate a very clear strategy, a very disciplined P&L.
So this is a good thing?
I think it's a good thing. I think the private markets and the public markets have to work in concert.
All right, so we have 13 seconds. This is what we call a super rapid round. Okay, what's the most optimistic view for the IPO market this year?
Most optimistic IPO, I think you're going to have a normal environment. Last year, if I look at the companies, the most important thing that I look at is the secondary market for IPOs. Companies that listed on the New York Stock Exchange traded 58% above their IPO price. So I think we're going to hopefully see that type of growth in the secondary, just post-IPO market this year.
All right, last question, the flip side to that is what's the biggest risk?
So the biggest risk is volatility, the things that are unexpected that happen in the market from time to time. I don't have a crystal ball. I don't know what that's going to be. Unfortunately, I don't know what's going to cause that unexpected shock. But I think the market does recognize those three pillars: resolving geopolitical conflict, border security, and focusing on a strong domestic economy. So as long as the administration stays within those three pillars, I don't know that there's much that's going to derail things.
But the rest sounds like it'll come from Washington.
I actually have no idea.
Okay.
It could be, I mean, you look at something like DeepSeek. I heard the folks right before, the panel right before this talk about DeepSeek. That was a big surprise that caused the market to react pretty negatively when those when those usage numbers came out. That has nothing to do with anything that's happening in DC.
You know someone's great when you just want to talk for another half hour. Lynn Martin of the NYSE Group. Thank you so much. Thank you, everybody.
Thanks for having me.
So appreciate it.